Welcome to TradeTheMBI.com. This is John. This report is for the 4th of May. And, well, we got the continuation that we expected, a little bit of the breakdown from the ES. Nothing serious because, again, we were looking at the NASDAQ as being support for holding things up because its MBI readings were much more robust than what we were seeing here from the NASDAQ. As I was talking about before, though, with the dip of the orange DOC, really needed a strong move from short setup within the DOC here with the cyan continuing to rise, and that just didn't happen. It started to fade off, and from a daily, that's pretty clear. So that's where we saw the rally at the end coming back after the dip, because the Fed did exactly what it said it was going to do, which was continue to raise rates despite what the market has been projecting and saying would have to happen. And the market, I would say, normally would be correct in most things, but I think they've been missing this one for quite some time as it relates to the commitment of the Fed. And it was just, in my view, the oil became the central component. If you could get oil prices down, that rise in interest rates could be offset by a decrease in oil prices. You can see here from the NQ held above the 76%, even though you had the white leading, you were still having magenta and yellow above 33. Now a little bit closer to that scary point, and we're at a point where the DOC green and cyan close together. So a rejection here with cyan rising definitely would be the break of support. But if green's able to get the crossover of cyan, that it's back up to the highs. For now, you're sort of like in a in between cross pattern here of just sideways until there's firm commitment. Because even if you get the short-term rise here, you already have short-term buyers rising. Even if midterm buyers coming in, you're still a little bit late with the DOC red, so it may take a few days, but a pivot up of the DOC red there would be a P2 pivot. That would be pretty strong, and I think that you would see new highs at that particular stage. So, interestingly enough, rates rising from the Fed, and Treasury yields actually decline because of the amount of money flowing in, lowering rates, and that's always an interesting one to see happen, and that's just the flight to security. Some people are getting scared. This is what I was talking about the other day with the dip below the red line back over here that led to the lows. Once we saw the weakness, the expectation was that we would revisit that as it started to break down, and sure enough, there it is. We've matched those lows. So all good from that standpoint. And keeping it down in this lower 60 range would be ideal from a Fed standpoint, and miraculous how it happened just to coincide with the Fed doing that, the very thing they need to keep things sort of on track without causing major disruption, or at least they believe. But that's got to sustain itself at the lower levels for a significant period of time. And barring any geopolitical situation like the Russians escalating now that there was an attack against the Kremlin, on the heels of what's supposed to be a spring offensive from the Ukrainians. That could create another dynamic that is yet unseen. Of course, gold popping to new highs traded off of that a little bit, simply because you have the oil decrease in that, so inflationary pressure is somewhat reduced. But it's definitely going to become the play if things get a little heated from the war side of things. So we'll see. And it was convenient that Zelensky ended up in Finland, so he's in a NATO country. So any retaliation unlikely on EU soil, and he's likely to continue his extended stay there. So that's interesting, even though they claim they have no responsibility in it. So those geopolitical factors are important to pay attention to because they can have a huge impact on where things go. And of course, it's not going to stop the euro or the continued decline of the dollar, which is kind of interesting because with rates rising, theoretically, you'd want to be running from the euro into the dollar. From all over the place, but there's this belief that the euro is going to correspondingly ECB rise rates. Not going to happen. They can't do it. It's already fragile enough here, so that's kind of an insignificant detail. just going to continue to rise anyway, just because it's where they want to move things. Because if things get bad, it just gives them more room. And it's been a fairly mediocre. Mediocre. Let's try that one again. It's been an exceptional run for the euro, um, for no good reason. Literally, it's not like that the euro was oversold. The EU is still not doing well, so it's an interesting thing to see what's going on with the dollar, and a lot of this has to play with the fact that just been a decrease in dollar usage from all these other world currencies converting to making trades outside dollars, and it's going to have a continued impact over time, and it's going to start to grow. Um, and that will be a significant one. So having prepared for the idea that you need to be in alternative currencies is real. Bitcoin and ETH we would expect to continue their rise as well as secondary sources, though. Gold's probably going to be a little bit stronger, one would expect. And relatively speaking, though, you can get these outside moves on the cryptos simply because of liquidity issues. So it buys a little opportunity there. Of course, we heard TS going on and off just a few moments ago, which is sad because we had charts up just a few minutes ago and then gone. Crazy stuff. That's the long and the short of it for now. So things are holding on despite continued headwinds, and I think that's the exact idea of a pain trade. The market keeps moving up where everyone thinks that it has to go lower, and as soon as that turns into a capitulation, then you'll see the reverse. Until then, just keep going with where the readings are. And for now, we've got some softness, but likely to hold support within the current setup. And potential new bull setup is taking place. So be ready. As always, though, trade well. We'll talk to you later.